Yeah, overall, it was a solid year last year with strong performance in a number of areas. In fact, you may have seen we were opening up more than one hotel a day last year, our record performance in the past decade. And that drove our underlying net system size growth up 5.6%. And as you said, our underlying revenues up 6%, and underlying profits up 6%. So really, really strong demand for the business overall, great momentum. We did see a bit of slowing into the fourth quarter as we expected, though, but the way our model works, again, strong revenue generation and profit generation.
RevPAR is one of the key metrics that analysts look at when it comes to your business, revenue available per room. How did that metric evolve in Q4? What was the momentum like, and what does that mean for the start of 2020 and the year ahead?
Yeah, on a global basis, the industry saw slowing into the fourth quarter, and there's a number of factors driving that. Clearly, the continued unrest in Hong Kong was a portion of that for our business. General slowing in Greater China, doing some of the macroeconomic trade issues that exist there, and also some of the supply and demand imbalance that's existing in certain markets. But again, the thing about our model being asset light, RevPAR is only one part of our driver of profit and growth. So the fact that we opened up a record number of hotels last year is what drove our revenue and our profit growth, and we'll continue to do so going forward.
Keith, I'm intrigued to know what the strength of the dollar means for that RevPAR number globally, because I'd imagine, looking at the read across in the trends, that actually you've been stronger in North America, the Caribbean, Latin America, just because there's perhaps a little insulation from the greenback strength.
Yeah, no, definitely. A strong dollar in the U.S. actually means that we have stronger international outbound from the U.S. into markets like the U.K. In fact, as you probably saw, London did exceptionally well last year when overall the U.K. was a bit softer too. And again, you're seeing generally we're a domestic business, so vast majority of our travel in the U.S. Is driven by U.S. customers too. And so again, a very, very healthy industry overall. We're at record levels of demand, record levels of RevPAR as well too. So quite healthy today.
Can I ask you, obviously the situation we see around coronavirus is making all CEOs that have business that is connected to China rethink their strategy, whether that be the way the supply chains operate or how to make them more resilient, or whether they should be expanding into this market as quickly as they previously planned to. Are you going back to the drawing board on any of your strategy for Asia Pac as a result of what you've seen in Hong Kong around the protests and now with coronavirus?
Yeah, fundamentally, no. As you may remember, I lived in Shanghai for a number of years and actually helped design our strategy for growth there, and we've been there for 35 years. And it's a phenomenally resilient industry. We saw with SARS, a very strong, sharp drop in demand for a short period of time, and then a very, very strong recovery. And today our business is significantly larger than it was back then. And that momentum, the fundamentals in China still exist today and going forward with the rising middle class, the growing wealth, and that's both China and across Asia Pacific. So we're fully committed to the region in its entirety.
Now, I see here you've got some exceptional items in the full year results, $865 million worth. Are those truly exceptional items, or can we expect to see more items like that come through this year?
Yeah, those are truly exceptional items. They relate to kind of a one-off associated with an acquisition we did a number of years ago. It doesn't reflect the value that we've created from the acquisition, but the trading conditions that changed a bit, so required us to have an impairment there for actually two different portfolios. But we're really excited about the growth of Kimpton and the UK portfolio we leased, which helped us grow the Voco brand too. So just one-offs for us.
You answered Jeff's question about the impact on the Asian region and what the coronavirus might mean for your strategy over there. But in terms of what you're feeling outside of Asia as a result of the coronavirus, clearly travel is being impacted across the world. What does that recovery look like? And how do you see the impact coming through before that recovery can take place in travel patterns outside of Asia?
You clearly are seeing significant disruption in China and in some of the surrounding countries in Asia Pacific. The further you move west, the less disruption you're seeing. We're seeing almost no impact in Europe and no impact into the US too. So it really would be a question for how long is the virus at a significant level in China and Asia Pacific? How long do travel restrictions stay into place? And when do people feel that the virus is now under control so they can go back to planning meetings and events and conferences too? And so it's a real difficult question to answer because no one really understands the trajectory. But we do know, having been through, I mean, I was in China with H1N1, you saw SARS, we've seen MERS. Things do bounce back quite strongly because the demand for travel is fundamental to our industry and to business.
Keith, there's a healthy debate around the desk about what the Eurozone economy is going to look like for full year 2020. There are some disappointing trends emerging early on in the year, particularly around the German data. Could you just fill us in on what you're seeing and whether you may be diverting some investment away from Europe this year because you just don't see the payoff?
You know, the fact that we are an asset-light company and we operate in 100 countries and territories around the world means we've got a lot of kind of arbitrage going on and where we're going to invest and where we're going to focus. So we still see pockets of growth across Europe. We signed a number of hotels last year. In fact, we had a record level of signings across the Europe, Middle East, and Africa continents. And so Europe, we still see growth. It is a bit muted though, and it will be directly tied to GDP growth. Again, but we can continue to invest in those markets. We're interested to see how Brexit ends up with the UK. Now the fact that we're post-Brexit, but what does the trade deal look like? How does the government begin to reinvest into the UK and see how GDP grows here?
And just a quick last one, Keith, before we let you go. The UK government announcing that they have bought up effectively a Holiday Inn at Heathrow Airport as a potential quarantine centre. Can you tell us a little bit more about the way that that came about and the conversation that you've had with the UK government on coronavirus?
Sure. I guess I'll take it more globally. We in China, in fact, in Wuhan, we have 4 hotels today which are actually housing all the medical professionals that have been flown in to help those affected by the virus. One of our hotels was making the meals for all the workers that were building the hospital there as well too. So we always try to be part of the solution and aid governments any which way we can. The UK government did approach one of our hotels here, ask if they could basically buy out the entirety of the hotel. We relocated guests so that it could be used for foreign nationals who need to self-isolate if required.
Hi, I'm Joanna Bersecci and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.